Hey traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex forecast for the week starting of 14 to the 19th of April 2019. Previous week was very interesting in terms of trading, and the way it seems the coming weeks would be interesting, not less than it started to be this week. So, a few updates and notes before we start. As always, on Monday I will be publishing my PDF to the forecast, PDF format to this forecast. So just come back to the video, and in the description below this video you would find the link to the PDF. Or just follow up my emails on the newsletter and get notified when it's up. So let's begin. As always, what we will be doing is reviewing the previous week forecast to see what worked, what failed, what's still relevant, what's irrelevant, and new opportunities if we have any. And basically what we do is we keep update, a follow-up to our plan week after week to see how things go, not only for the day trading, because we all know what day trading that day trading is irrelevant when you try to build a weekly forecast, and it's all about medium term and swing trading, so you are able to have a follow-up for your plan, calm and relax. So the first one was the euro versus the pound. The long-term idea is sells. Quick reminder, this is where it all begins from. Triple cycle from the weekly. Okay, bearish divergence, so we are after double wave correction. No divergence at the ending part here, so our expectations are for continuation. Okay, now after that we drop to the daily, and daily our expectations was one of the two scenarios: or we are going to dance inside this range for a while, or we are going to be exposed for two waves. Both scenarios are completely acceptable, as this is a corrective cycle to the double cycle the daily presented. Once this is over, we are back to sales very likely. And this is pretty much the plan for the euro versus the pound. Let's see where we stand. We stand exactly in the same place, nothing changed, so our plan stands still. It does look like this scenario could turn to be a double wave to try and to reach these tops, maybe slightly higher before the next further move down, but it could easily resist this top here. The MACD would not really help us here because we are in a range scenario. Range does not apply for MACDs, remember that, very very important. What you might see here is the RSI creating some kind of slowdown, some kind of pattern here and then turning down. RSI is better in ranges than the MACD for turnarounds. And once this top is created on the top of this range, as I just showed, sorry, we should be looking for bearish evidence. Now, what is the bearish evidence? Right? Bearish evidence could be a false breakout to the upside, something like that. Fake breakout. Bearish evidence could be a hold of a good level with a classical bearish candle pattern, not 15 minutes, not 1 hour, not even 4 hour. We're speaking here about the daily range. So you want to see daily structure support your idea. And it could be one of my favorites, after false breaks, to have lower lows, or alternative is on the lower time frames, start to see lower highs, lower lows, to define a beginning of a possible new bearish trend, and then you can go and start to look to sell rallies. Then of course the whole idea is about risk management, and see if the setup you get with the bearish evidence gives you a good possibility for a good risk reward. So the next one on the list we had is the CAD franc. We are after buys. And our plan was, after the break of the daily trend line, looking for buys, retrace, and buys. That was our plan. This is where we got it, right? Retrace and buys. So this idea worked pretty beautifully for us. In that place, we got a bullish hidden divergence. Now, I like such scenarios a bit less because we don't have really negative here. It's but the good verification here was triple high, triple lows going up, double wave correction, trendline breakout. We can't really ask for more when the weekly and the daily cycles are good with us. Well, support us. Okay. Now take a look what happens currently on the daily time frame. The daily time frame now starts to show a possibility for a bearish hidden divergence. Okay, the 4-hour chart, take a look on the MACD, what happens here. It starts to develop here, divergence, classical divergence on the moving averages. Apply to that this double cycle, apply to that this several levels in a row that use the early entries. Imagine how many people go for long-term sells in very early stages, like here, like here, like here, or whatever it is, right? Not for short term, but for long term, expecting a big fish. Why? Because of the divergence, because of the resistance, because of the trendline, whatever it is. Ignoring what happens on the higher time frames. So these levels are very likely to be the levels where we should see some kind of deeper corrections down. I still believe after that we are going up, but we will keep the update on the coming weeks anyway. So, by the way, I uploaded a new MACD video to the channel. You can see that next to my picture here. And you can learn more about the multi-time frames, usage of the MACD, and how we define the correct workout here. So this is pretty much what happens now with the CAD franc. I expect from these levels some stoppage. I do expect the pressure from bearish hidden on a daily and the 4-hour doing this divergence starts to provide us some kind of short-term corrections, and then we will be looking again for buys on the coming weeks. So let's move on. Next one on the list for us, Aussie dollar. Long story short, we are only after buys. The idea was to see the daily breaking through the range and then buy retraces. And if the range would not be broken, we would be after new low. But this wedge did break, and let's take a look what happened since. Here we go. We got a breakout as we wanted, right? Sorry, here. We got a breakout, retrace, and continuation. So the biggest question is what's next, right? So let's take a look here. This is our idea. We wanted to trade. This is what we got. Now what's next? My personal view for long term still remains bullish, of course. Why? Because I'm trading this long term view. So my long term is only for buys. Last divergence is bullish. Nothing prevents me to keep looking for buys for the long time frame. Weekly is good, daily is good. Why would I stop? So there is a resistance. There is a trend line. We might see some kind of fight on the short term, but I expect it to break through from here or after some kind of correction, right? To break through and continue higher. So my personal view for the Aussie dollar was and remains bullish. Short-term retraces could happen. My invalidation would remain the last official low, and for me it's only for the buys. For all those of you who are involved with the buys, now you know I'm for several weeks here I'm bullish. For all those of you who are involved with the buys, what I always say is the most important thing: do not let a winner turn a loser. Sometimes it doesn't matter how beautiful we draw our lines, how amazing our knowledge is about technical analysis. Sometimes the market does not agree with us. So instead of finding ourselves coming back home from work or from gym or from any meeting and then like, oh my god, what just happened? Instead of finding yourself in these situations, when you see the market provide you possible scenarios against you, some obstacles, massive trend line from the higher time frames, divergences against you, listen, do not try to be smarter than the market. The market tells you be careful, be careful. Okay? Most of the times the trends are not massive. Most of the times the market going back and forth. So instead of finding yourself regretting, oh, I wish I would cash out. How many times it happened to you, right? Well, for me it happened thousands of times in the past. So instead of finding yourself in this situation, why I didn't cash out, I wish I would cash out, protect yourself. At least that's the minimal stage you want to do. Protect yourself. Do not let a winner in your hands turn a loser. It's a very, very important thing. Traders don't pay attention to that. Everyone, especially in the beginning stage, fill themselves with the wish of it will be fine. And here's the reality. It will not be fine. It will be fine only if you will make it fine. It will not be fine if you would just say it will be fine. Okay? That maybe belong to good motivational speeches and books. In reality, the market doesn't care of that. So remember that. It's a very, very important thing, and I keep repeating that over and over again in my videos. It's important, and I hope you are able to understand that and to apply that to your trading. Never try to be smarter than the market. So this is the Aussie dollar. The next one we were following is the EURAUD. The plan for long-term is sell. The idea was sell the rallies. So we got a scenario here. We got a up move, down move, all the way until we got a new divergence. It doesn't change our longer term view, which will still remain bearish. My personal view, as always, it was and remains, every rally is a sell opportunity. So personally, I remain bearish. Yes, on the short term, we might see retraces up. But the view here is this. Now, later or sooner, this would become a bullish divergence. And we will have to respect that. Because from there, we might go and find ourselves into deeper correction. But at this stage, sell the rallies is the plan. And now it could continue inside this ranging scenario. There is nothing against it, right? Or anything like that, or any different structure to be created. It's more than okay. Rallies with bearish evidences should be used for possible sell opportunities. If you are not in, if you are, just manage your positions. It's simple as that. So my view remains bearish for the EURAUD. And here we go. This is the same scenario like described before. Euro dollar. Now here is the thing. On the short term, I was having my bearish idea, expecting a new low, so I can go to make a buy. This was the plan. Now the alternative plan here was, let me just remove that here. If we see 3 higher highs and higher lows, calling in a bullish structure, defining a bullish trend, we will abandon the bearish view in the short term and go start looking for the buys. Now take a look what the euro does as for now. Here you go. You see that? 3 higher highs, 3 higher lows. Game over. The idea for sells is irrelevant anymore. Weekly ticks its bullish divergence. Here you go. Take a look on the MACD. Once again, a reminder, you have a new great video about the MACD available for you. And it's next to my picture. You see this sign here. Okay, it's like, where is my here? somewhere here. You should see the sign. And click on that. You will see the recommendation for the MACD video. In case you missed it in the YouTube channel, make sure to watch it. It will give you a much clearer understanding of what to look for. So we have this bullish divergence. Daily holds this level, called the double bottom. After this convergence, remember I spoke about it on the last couple of weeks. If you missed it, you can always go back, check my previous videos, see the discussion here. So after this convergence, the idea was wait for the bullish call from the bulls. Bullish call from the bulls? Vlad and his English. Wait for the bullish call and the turnaround. Now we got it. And we got it here on the 4-hour chart with 3 higher highs and higher lows created. The idea from here, this, buy retraces. We have massive, beautifully building, by the way, channel here. So every retrace down to the channel is a good buy opportunity. Look for bullish evidences, bullish divergences, two wave retraces, ABCD pattern correction, right? Like this, for example, right? Bullish or simply range, some kind of structure and then breakout. All that would be acceptable stoppage for a temporary attempt before the continuation up, the expected continuation up, and the invalidation zone is this. So the euro dollar becomes bullish, we are after buys. And this is the main update we have here. Euro Kiwi, one of the best calls we have in the last few weeks. The idea was short-term sells from this area. Short-term sells and then look for the buys. So let's take a look what we have on the Euro Kiwi. That was the zone for us, right? Pretty much here. We got a movement down. We got the whoa, that's that became big, and we got a move upside again. So again, it's one of the best pairs as for now at this stage. I do expect a continuation. So short-term retraces and buy continuation. This is my plan. 4-hour chart creates beautiful triple cycle here, divergence, so yep, corrections and buys. Corrections could be two waves range, corrections could be one straight move down for a bullish hidden divergence, so that could be such scenario, and then a bullish hidden divergence would form, something like that. Okay, all that would be more than acceptable. So Euro Kiwi was and remains bullish. If you run your buys and you have such signs against you, remember, do not let winner turn a loser. Partial cash out, full cash out, and then look for re-entries. Stop loss to break even to make sure you are risk free. Okay. Next one was the Kiwi CAD. The idea was short-term buys. Then we are go back to sells. Kiwi CAD. Here we go. So short-term buys. Now back to sells. Now the question is this enough for a correction? I'm doubtful. I think the correction would be slightly longer. I believe we're gonna see that fighting here for a while before it continues lower. So the short term from my point of view, and yes, it might try to go lower, but I definitely see here some kind of deeper correction before the sells. Sell the rallies with good bearish evidences was and will remain my main plan here. Dollar yen became pretty ugly previous week. So one of the plans was we are going to 114. The idea was this, retraces and buys. Now again, that's not the pair I would want to deal with too much with normal risk, more like aggressive trading. So we got a retrace, we got a rally. I still believe we are going forward towards 114 or so. 4-hour chart would have to recreate the divergence here. So it will have to do something like that. And once the daily becomes a divergence and 4-hour becomes a divergence, we should be looking again for sells. Meanwhile, I believe we are going slightly further up. Okay, pay attention to this level. We might see some resistance around there. Pay attention to this divergence developing. I do believe as closer as we get here, the more resistance we will start to see and the more bearish opportunities coming and happening right there. Next one, Euro franc. I was looking for sell and I couldn't be more wrong than that here. I completely had a bad read here, which was my plan is two waves and look for sells, expecting one more low. Now what happened in reality is completely different. The good part, the lucky part is I did not get tempted for a sell for a reason that we never got a trendline breakout for sell continuation. But the whole idea failed for me and it's time to adjust. Now what happens here? Daily never created a new low, never created this divergence. So basically what the daily has for us is an extreme divergence. Extreme divergence, if you don't know what it is, it's a situation where we have a local MACD low followed and confirmed by RSI local low on specific levels, and this is what we got here. And we got this situation as an extreme, and we got a reversal. The first sign for a possible reversal is, first of all, if you remember, I was talking about it. Let's see if I have it here in the weekly time frame. No. The idea was if the weekly ticks bullish, and again, you can always go back to the previous week and see the video. The idea, if this was bullish, we are switching to up and to buys. And if the 4-hour chart creates turning principle, and it did, we are after buys. So what we see here happened is this trio. So this is pretty much what means the game is over. Look for buys, short-term retraces, and buy opportunity. The way I see that, we are going all the way up again to here, or slightly higher. Okay, so what I see here happening is this, and this. That's pretty much it for the euro versus the franc. Now, one of my favorites, the Aussie versus the Kiwi, and another one that paid big time. And let's take a look there. But before that, if you're new to the channel, I would like to invite you to subscribe. Just go below the video and you'll see the subscribe button. Just click this ring so you get notifications when I upload a new video for you. And I would like to ask your support back to leave your comment in the comment section below. And here is the good thing. I decided that as a thank you for your support back, the best comments, the most honest comments, I don't need anything fake there, but the most honest comments about how do you see my work here for you, and what do you think about my trading style, my trading work, the way I present you, the most honest comment and feedback, I would grant a great gift, 2 months free access to Traders Academy Club. So if you enjoy the work and you have something to say that also might be helpful for the community, please share your support back to my work, leave your comment below, and as a thank you, I will grant to the best comment 2 months free access to Traders Academy Club. And of course you can go and share this video with your friends. It's free for the community. So the next one is the Aussie versus the Kiwi. Our plan was and remains buys. I think we're going to 106, 107. This was my personal plan, as you remember. Long story short, Aussie Kiwi is there exactly. So we reached the area. The question is what's next? I believe that this area is where we are heading. From there, short-term sells and buys again. So this is pretty much what I think is going to happen. We might see that happening from here and then buys. I more suspect it will do something like that. Move down, move up again. This is for the Aussie Kiwi. If you have your buys running, enjoy some profits, or at least risk-free your positions. That's what I do in such scenarios. Next one, Aussie franc. The plan was buys. And this is another great call we had. Boom. So the biggest question is what's next. My view remains the same. Buy retraces. The thing here is that the 4-hour chart now starts to create this divergence. We have some massive areas here, stop losses. So I would expect some correction. We have this kind of, well, it was a channel. Now it's breaking. So basically I would, let me just clear it a bit. What I would be looking here to do, oh, no, not a good drawing. 3 spots. No, we don't really have 3 spots here. It was more like that with the, well, more in this direction. So a duplication for this would be the possibility for next rally. based on the channels. And daily bullish, weekly bullish. Buy retraces was and remains my plan. Nothing to update here, my friends. Nothing to update here, my friends. I continue with the same view. Bullish. And if you hold these buys, which provided us with this beautiful bullish hidden divergence, enjoy. And of course, do not let a winner turn a loser. We got a beautiful run here for about 100 pips. Some short-term signs against, money in the pocket, partial money in the pocket, stop loss to break even. Do not let your winner turn a loser. And this is pretty much it from the Forex view. I don't really have any new pairs because this one pays simply beautiful. We just have the turnaround on the euro dollar and the euro franc. The rest, as you can see, pay us amazingly from the weekly plan. Gold and silver, the idea was buy setups. I wanted to see 3 higher highs and then buy retraces or a new low. So what we got on the gold was basically this exactly. We got a breakout here. It created the 3 higher highs. And now, look what happens. The idea was buy retraces here. Now look what happens. If you follow my work, you know what I always say. If the retrace happens within one straight leg, through all the Fibonacci retraces. Now, why do I mention here one straight leg? Because if it happens in 2 legs, like an ABCD pattern, acceptable. That is a corrective cycle. If it happens like a range, acceptable. But one straight leg is not acceptable. When it goes through all the Fibonacci levels, which it does in that case, it's a suspicious sign. That the bulls are not as powerful as we might have been thinking. So, the long-term plan does not change, but on the shorter view, we definitely might be looking at making one more low until the next divergence holds and we continue the buys. So what could happen here is a hold of this triple bottom, or likely one more low to clean these stop losses around below this area, and then once this becomes a divergence, we are after buys again. So the plan for long term that did not change. For short term, it did, and we do require clearer setup. Same exactly with silver. The idea was to gain, let me show you here. The idea was to gain a new low and go for buys, or if we have 3 higher highs, 3 higher lows, we are after buys. This was the plan. Now the silver, not as gold, did not provide 3 higher highs, 3 higher lows. It did provide 2 of them. So basically the plan for the silver here is exactly like the gold. We do want this divergence to hold, tick, and we become bullish again. The long-term plan did not change. The short-term just make us wait slightly longer. This is the silver, and the oil. We wanted to look for possible sales opportunities around the area of the Fibonacci expansions right here. So this is, let me see, here and here. That was our plan. No, that's WCN, sorry. So this is what we were following to reach this area. We did here. Now the sells. The problem I have on such setups is we did not have here any false breakout. We did not yet have lower lows. So what I would like to see in this structure is basically lower highs, lower lows, and then possibly look to sell the rallies. And the alternative, of course, if we simply turn around here, then the false breakout, lower lows, and then sell the rallies. So the levels reached, the divergence reached. Now we do need to find a clear setup for a turnaround. Turnaround is false breaks, lower lows, convergence, or 3 lower highs, 3 lower lows for a trend change, and then we can sell the rallies. And the index, dollar index, one of the scenarios we were following, one of them was triple top. Let's go down to, where is my index? Here. So this is pretty much holding, and it's great question, will that continue from here? I believe it could do that. The daily is bearish divergence, the weekly is bearish divergence, and the 4-hour chart is a mirror to the euro dollar. 3 lower highs, 3 lower lows. I believe we are for sales. And that's pretty much my view here. And that's all. Indices, I still don't have any clear view, so I'm waiting for clear setup there. I have a clear view. I just don't have a clear setup to discuss. So I'm on the fence waiting for the next opportunities. So that's pretty much all for this weekly forecast. Again, we had several amazing opportunities, amazing payouts during this week. I expect more on the coming weeks. Also, the period starts to be interesting, right? The spring, right before the summer. So we should see some good moves. I would like to invite you to join me in my live trading rooms. To join, just follow the link below to Traders Academy Club. We have the live trading rooms every single day, followed by trading reports, detailed trading reports with all the opportunities we find relevant and useful. That's all. Thank you very much for your time. I appreciate it very much. And if you enjoyed the video, please hit the like button, drop some comment below, and I hope to see you with us in the live trading rooms. And also, if you are new to the channel, subscribe, and inside the description you get a link to the free Telegram channel we have for all the community, open completely for the community, for trading ideas, articles, videos, and many more great surprises. Thank you for your time. I wish you a wonderful trading week and happy weekend if you watch that during the weekend. Remember, on Monday I'll publish the PDF, so come back to the video in the description, you would see that there. And thank you once again. I'm Vladimir Ribakov, Traders Academy Club, and I'll see you soon. Bye for now.